Let's turn our attention to Ethereum, where as developers gear up for the number 2 blockchain's next major upgrade, thoughts are turning to its potential impact on the token's price. In the fall of last year, many will remember, there was quite a lot of attention paid to the protocol's last major upgrade, which was known as the merge, where the Ethereum blockchain successfully moved to a new consensus mechanism. Even though that transition went well, about as well as it could, with no major hiccups, the upgrade actually did little for traders, and the price trended lower over the rest of the year. But this time might be different, at least according to some analysts. That's because there are more than 10 million Ether tokens currently locked up in the blockchain's proof-of-work system, and if things go to plan, their owners could take custody of them back. David, what do you think?
Yeah, is that number correct? 10 million? That's less than
more
I
than
would have
10 million,
guessed,
17 million, something like that. It's a lot.
So I guess I would say there are two dynamics here. Obviously, when you get a big unlock like this, you're going to have people looking for liquidity, so you could have some sales, you could have some downward pressure. However, on the other hand, I think we are in a sort of incipient bullish phase right now. Because we have had so much of this, Do Kwon, Luna crap cleared out. There is a sense that we have bottomed, and so you might also see some people hanging on despite this unlock, looking for further upward moves in the sort of medium term. Short term, we might get a little bit of a drop, I think. Zach, what do you think?
I think the halving is priced in, and I think the unlock is priced in. I don't know if this is going to see a ton of price activity happen. Hey, I mean, people are probably going to stick to their ETH, right? These people are crazy about this ETH stuff, man. Ethereum seems to be doing pretty well for itself, both as a smart contract platform and Ether as the asset itself. It hasn't reclaimed the glorious highs of its bull run peak, but it's holding steady. And yeah, I think the incipient bull market vibe out there certainly has a lot to do with, potentially the reading of tea leaves when it comes to the macroeconomic picture as well. So yeah, I don't know. I mean, is the unlock priced in? I'll toss that back to you, Adam. What do you think?
I mean, I think just talking about the incipient bull market narrative, I'm really curious to see if that one winds up playing out. I think that there are a lot of, certainly the Federal Reserve, macro monetary policy, et cetera, they don't want that to happen. But there is that interesting dynamic, which is that because the U.S. is currently in in a extraordinary measures period of the debt ceiling, right, where the Treasury effectively can't borrow any more money directly. So instead what they're doing is they're spending down the cash that they have. That actually is a net stimulative impact, and it's something that's expected to last probably until the end of the spring. So that's something that just got started last month. And basically, it has a significant chance of actually counteracting what the Fed has been doing in terms of trying to tighten monetary policy levers. So I appreciate that suddenly got super wonk. We don't have to talk about this, but I do think that there is an interesting argument for a technical bull market just because of what's going on at Treasury right now. Any further thoughts on that, David?
No, I mean, Treasury is definitely fighting against every bull market everywhere and seeming to not have much success on any front. But of course, we have the inverse, right? Where as they fail, the likelihood of further extreme action becomes more likely. Therefore, good news is bad news, et cetera. It's all complicated. And ultimately, we are paid to talk about this stuff, not necessarily to know the future. So we're just doing our best.